One of the most commonly asked questions we get is, why DSCR? What sets it apart from traditional loans, conforming bank loans? It really comes down to three things to help you grow faster, get that wealth going now instead of waiting 2 or 3 years like some of the traditional loans out there. So here's what we come across when we're talking to people who are just getting into real estate or just discovering DSCR loans. And what is the most important thing, why DSCRs are so great? Number one is no tax returns. People who either haven't caught up, filed, or who have not been in the business for 2 years like most banks want, DSCR is perfect because they don't look at personal or business tax returns. So you could have just started the business, you could have just changed occupations or changed locations and moved to another city. DSCR does not care like other loans, traditional loans. Brings us to number two is business history. If you go to a bank, you go to a traditional lender, if you don't qualify personally on yourself and you're looking to put it through the business, you're going to have the history and the history in the line of business that you're in right now. So if you move from W-2 to 1099, traditional loans say no, DSCR says yes. If you move from location to location, like you move from Austin to Denver, once again, DSCR, that does not matter, where it does in traditional loans and bank financing. So the first two are probably the biggest, and what most people run against is the business. How long have you been? How long have you filed your tax returns? And what's on those tax returns? Have you made enough money over the last 2 years to qualify for that loan using traditional loans? Once again, DSCR does not care what you have done over the last 2 years or even over the last 2 weeks. All it cares about or looks at is, does the property at least break even or cash flow? And number three, why DSCR is great is you can start now. You can start faster, start building that wealth without waiting 2 years of trying to build the income, trying to report all the income on your tax returns. Because that's the other negative aspect of traditional and bank financing is it's hard to write off any of the expenses to get your income up because they're going to average the last 2 years. DSCR focuses only on the property, only on what the property makes, and doesn't care if you just started the business the day you signed the contract. So why is DSCR so great? Because it helps everyone get in business now. You can start real estate investing now, not waiting the 2 years like it traditionally took. If you're looking to grow wealth, build it faster, DSCR is something you have to at least look at. I never say pick one product and that's all you could do, but look at DSCR, especially when you're starting out, because it is a great product for rentals. Remember, it is only for rentals. It is not a fix and flip loan. Some people get that confused because DSCR is everywhere out there right now. Just remember with DSCR, we did a video on this, you have to make sure you're qualified, and it's easy. It's just, where's your credit score? And do you have the money for the down payment? And then the property also has to qualify, because we always go back to the property is the income source. So the income source, meaning the rents from the property, have to at least break even or make a profit. If you're in real estate investing, you're trying to grow your portfolio, you really want it to cash flow anyway. So do your numbers. Check out our website, thecashflowcompany.com. We have a great DSCR calculator. You could run your numbers through that. Make sure that property, the particular property, cash flows based on rents, based on the mortgage payment, the taxes, insurance, and if you have HOA and flood. If you have any questions, leave us a comment, and please help other investors by liking and sharing this video. And please subscribe so you can keep up on all the videos we put out to make sure you're successful in real estate investing.